Welcome everybody. Glad to be with you today. Got a great presentation for you, very brief, but I hope it adds a lot of value to your trading. Now, if any of you have seen me present recently, the first few slides will probably be very familiar to you. I tend to cover those in just about every presentation I do, just because I do feel they are very important. Now, today's presentation is on our winning momentum strategy. Okay, for those of you joining us for the first time, just a bit about us here at Trading Wins. We're a group of pro traders with well over 30 years of experience. We're real professionals and teachers. We've been developing our own strategies and systems for many years, and we've been teaching people around the globe from complete beginners to experts. Now, today's outline, I'm going to start and share with you our money management rules, the same rules that myself and the other traders here at Trading Wins use daily. I'm also going to tell you what you will need to apply this system. I'm going to give you the actual strategy today. We're going to go through it in detail with several examples. And then we're going to do a bit of a live chart review, time permitting. Okay, at this point in the presentation, if you have a favorite symbol that you like to trade, whether it's stocks, futures, Forex, it really doesn't matter, or something you're planning to trade, you can type it in to your chat at that point. I'll bring up my live charts and we can review those together. Okay, and then as always, hopefully we'll have some time for Q&A. Before I get into the meat of this, just a couple of quick poll questions, just so I know who my audience is and I can tailor my examples specifically to you. If you can, please let me know which market you do trade most. Is it stocks, options, futures, or Forex? Can you please type that into your chat for me? Thank you so much, everybody. Okay, we've got a nice mix. Several futures and options. Excellent. Okay, we've got a lively crowd too. Excellent. Thanks so much. One last question before we move on. On average, how many trades do you place per month? Is it 1 to 10, 11 to 20, or are you extremely active? Please take a few seconds to type that in as well. Excellent, great. Well, a lot of active traders. I think you're going to really enjoy what I'm going to show you today. It's very simple, but can be very effective. But before we get to that, a bit of the legal stuff. Remember, trading can be very risky if you don't know what you're doing. You really do need to educate yourself and hone your skills. So especially if you're just starting out, do not trade with money that you cannot afford to lose. Okay, now let's get into this. Our money management rules, the rules we've followed here for many years and continue to do so. Number one, as I said, never trade with money you can't afford to lose. Okay, you need to trade with an amount that is small enough that it feels completely insignificant to you. Now, for some of you that'll be a couple $100. For others it'll be several thousand. The amount doesn't matter. The whole purpose of this is, as you trade, you'll come to understand that trading is much more about managing a trade once you're in it than it is finding the perfect entry. Okay, so when you do get into a trade, you need to remain calm, you need to be able to think rationally and manage that trade appropriately. If you're not, you won't be able to remain disciplined and follow your rules. So you really do need to trade with an amount that feels completely insignificant to you. Also, never risk more than 5% of your account balance in any one trade. And if you have a larger account, you can certainly bring this down to 2.5%, even 2%. You will have a sizable trade on and still and really cap your risk. Also, never have more than 50% of your account balance or 10 trades, if you follow that 5% rule, active at any one time in the markets. Now, that may throw some of you back for a minute, thinking, wow, I'm going to leave half my account sitting there doing nothing. But the whole purpose of this is there are so many things when it comes to trading that are completely out of our control, and there could be some catastrophic event or some major news announcement that comes out of nowhere and really hits the markets. And if you have your full account exposed, you could take a significant loss when that happens. So this is number one, to prevent those big losses, but number two, to always have cash there available. that should something like that happen, you have cash available to recover from such a loss. Okay. Now, lastly, never place more than 2 trades per day. Now, all the examples I'm going to show you today are daily charts. Again, they're just examples. We can run through some intraday time frames as well. This works on any time frame, but the whole purpose of this is, and we've seen a great example of it recently. We've seen days recently where the Dow's been up 200-300 points, but then the next day is down 200-300 points, followed by another strong update, etc. So when you get a day that is very strong one way or the other, you're going to get a lot of trade setups in that direction. And if you were to jump in and put on 10 trades at a time, and then the following day the market retraces on you, you're going to find yourself in a big hole right off the bat. So you do want to spread your trades out, whether you're trading intraday or on daily or weekly charts. The whole purpose of this is be selective, pick the best of the best, and spread your trades out. Okay? A couple other rules we follow here, or goals we have. Number one, you'll never go broke taking profit. So when we have a profit, we take it, especially if you're just starting out. Don't worry so much about trying to stay in that trade as long as possible. Concentrate on banking those profits, and with experience, you will find ways to remain in a trade and squeeze out every bit of profit in it. And I'll cover more of that a little later on. Also, leave your ego at the door when you're trading. This is not about whether you're right or wrong. That's important, but more importantly, it's all about how much money you make when you're right versus how much money you lose when you're wrong. Okay? Now, what will you need to trade this? Number one, this can be used on just about any charting platform. Okay, there are 3 indicators that I'm going to plot on my chart. There's the 20-period simple moving average, the Ichimoku, Kinko-hoi, and excuse my pronunciation, never been able to pronounce that properly, and the RSI indicators. Okay, and they're widely available nowadays on most charting platforms. So there's no need to go out and spend more money on new hardware or complicated charting software. Okay, if you're watching this webinar, you have everything you need. Before I get into the actual strategy, here are a few benefits of this. Number one, as I mentioned already, the system will work on any market, stock, option, futures, forex. I'm going to show you examples of each. Okay, it works globally on any time frame and any price level market, stock or other security. Also, you don't have to have a ton of experience to trade with this. You're going to see just how easy it is to spot on the chart and follow these rules. Okay, very, very clear entry and exit points. It has extremely low risk. Any of you who have been with us before or have tried any of our services, you understand just how conservative we are, and we always trade on very low risk. Now, one last thing, it's consistently profitable. This is the one thing that you always want out of any trading system, and we have traded with this for many, many years, and it's been tested backwards and forwards and every which way, and it is consistently profitable in every type of market that we've seen. So let's get into what you've been waiting for, the actual strategy. As I said, the components of this are the 20-period simple moving average. We have tried exponential and weighted, etc., but the 20 is just it's so widely used by so many professionals and retail traders that it just makes the most sense. The Ichimoku cloud and the relative strength index. That is all we're going to plot on our chart. But I'm going to show you now. I'm going to switch to my live charting platform, and I'm going to show you how to use those. It's completely different than what you're used to. Okay, so let me get to my charts here. All right. So first of all, what you're seeing here is a very slimmed down version of the Ichimoku cloud. Okay, some of you may be very familiar with this indicator. Very, very popular over in Asia for many years. More recently here in North America. But it can be a lot more complicated than this, and I'm going to bring up the settings and add these back in just to show you exactly what this normally looks like. Okay, I use it much differently than most. Okay, but this is what it would normally look like. Okay, a ton of different lines on your chart. Now, these are used for support, resistance, for entries, exits, etc. It's a great indicator. But the whole purpose with this strategy is just to use it to identify trends. Okay, so I'm going to actually save some time. Let's talk a bit about the RSI, and then I'll clean up my chart. Okay, the RSI as well is typically used to identify overbought, oversold conditions, so extreme. So when you plot the default version of the RSI on your chart, you will see usually a line drawn at the 80 level and another one drawn at the 20 level. Okay, and that is to identify extremes of oversold and overbought conditions. Again, with this strategy, we use it completely different. Number one, if you bring up the RSI, the default setting on most charting platforms is 14. You can see here I've cut that in half. We've moved that to 7. Okay, we want this to be very responsive, and that is why we moved it down to 7. And also, we've removed the 80-20 lines and just plotted one right down the middle at the 50 point. Okay, so let me clean up my chart and talk about the actual entry rules with this system. So, as with any system, really, when you're trading with the trend and momentum on your side, more than half the battle has been won. So let me take a quick second and show you what I mean by momentum. And this is more where the 20-period moving average comes into play. Okay, it helps us as a visual aid identify the strength of the momentum that's either on our side or against us. Okay, now momentum, it should be read by the slope of the price bars. Okay, so you could have slight momentum, you could have stronger momentum, or you can have very significant momentum. So the higher that slope in the price bars, the better. Okay, that means momentum. It's like having a wind at your back pushing you forward. Okay, that's what you want to see. It's the same thing to the downside. You can have slight momentum, you can have more significant, or you can have very significant. Again, if any of you have seen me present on other strategies, you've heard the same thing again. It's very important. We trade with it all the time. It works extremely well. So you can certainly measure this on the bars, or you can have the 20-period moving average plotted on your chart, which will pretty much draw that in for you. Okay, so the Ichimoku cloud, the slimmed down version that I have here, is used to identify a trend. So in other words, what we want to see for a long trade here, a trade to the long side, is we want not only the 20-period moving average above the cloud, but we want the price bars above the cloud as well. Okay, that'll tell us we're in an uptrend. It's very basic, but that's all we need, and you'll understand why in a moment. At that point, once we have that in place, we look for that slope. And whenever we have a significant slope leaning in our direction, that's when we want to switch and have a look at the RSI. Okay? So, in other words, when we've moved above the cloud here, you can see we had a nice slope at this point, but then it flattened out. At this point, we do not want to look at the RSI. Okay? We want to look at it while we have that momentum in place. Now, for the RSI, all we're looking for long trades is that the RSI line dips below that midpoint, that 50 line, and then moves back above. It's that point where it crosses back from below to above the 50 that will define our entries. Okay? So here we are, we're above the cloud in both the price bars and the 20-period moving average. And we have here the RSI which dips below briefly and then back above. So that point where it dips back above, which is this bar here, let me draw in a time level here. Okay, I'm going to thicken that up for you so you can see it clearly, and I'll actually make it brighter as well. I'll make it green. Okay, so that's our entry right there. Now, when you do get an entry like that, number one, you want to wait for the price to move above the high of that bar before considering a long. But should you get that and enter long, you then want to put your stop just below the most recent low. Okay, you want to give this a bit of room to go. And in a situation like this, like we have on SYMC, okay, we're looking at an entry of about 2260 and a stop around 2107, or call it 21 even, so about $1.60 of room. You don't even have to go that far. You can take the midpoint as well. That's totally fine, especially if there's an area of support there. But the reason for this is for this pattern here. I'm going to explain in a moment, right here. Okay. Sometimes you get what we call a double dip in the RSI, which is very powerful. You want to see these. This is what you really want to keep your eyes out for. But you can see here we had an entry, okay, then it pulled back again below and then moved back, giving us a second entry there. Now, what I want you to concentrate on is just the first entry. Once it gets you in there and you've plotted your stop, you ignore anything else. You don't worry about whether the RSI goes completely against you or not, or goes zoom into overbought levels. It really doesn't matter. But you do want to keep an eye on this double dip, this little W pattern, okay? Because that usually is a much stronger setup. So if you do get that, you, at this point, with your second entry, may want to consider adding to your position at that point, because that is usually when it propels higher in your direction. Otherwise, that is it. I mean, there's a lot more to this strategy, which I'll talk about in a little while, but that is the basics of it, okay? You look for price and the 20 to be above the cloud, and then you look for the RSI to briefly dip below and back above that midline. And it's that cross above the midline that will give you your entry, okay? Will give you your setup, I should say, and then your actual trigger to get in the trade is a trade above that bar's high, okay? That will get you in. So now let's look at a potential short trade, okay? Same thing. If we look back in this area, just look to the left. Number one, we have very, very strong momentum to the downside here, okay? You can see it in the 20, okay? You can also measure in the bars, which would be even greater. So we certainly have momentum to the downside, which is what we want to see. The 20-period moving average and the price bars are both below the cloud, which we want to see for a short trade. We're then looking for the RSI to tell us when to get in, to time our entry. Now you can see right here it moved above the 50 and then back below, and it's at this point where we want to consider it. Now at this point, in this particular example, here, let me draw the line for you, okay, which is right around here. Let me fatten that up a little and make this red. Okay, at that point you can see the moving average had gone kind of flat. All right, so this is not a perfect example. This is what I meant by being selective and picking, you know, only the 1 or 2 best trades a night. This is one of the ways you can differentiate between a very strong setup and a not so strong setup, and I'll touch a bit more about that later on. But just for the rules are the same, just the opposite of the long side. So in other words, you need strong momentum lower, you need 20 and price bars to be below the cloud, and then you need the RSI to move above and back below the 50 point in the RSI, and that will get your entry. And then from that point on, it's just a matter of managing that trade. Okay, let's look at a few more examples here. Here's a chart of American Express. And again, it's very easy to spot because your eye can quickly go to that 20 and determine whether we do have a significant slope or not, and whether we are above the cloud or below the cloud. And it's that simple. Once we have that, for example, back here, when we were back here, you can see that right in here, at the far left, we had a situation where the slope in the 20 was significantly higher. You had the bars and the 20 above the cloud, and right here, the RSI went briefly below and then back above the 50. That would have been your entry area. Okay, let me mark this. Okay, right in here was your entry on that. But this is why you put your stop at the previous low, because you have here that situation that can happen with the double dip. And really, you don't mind this. You want this to happen because this is what's going to propel you forward. Okay, so it went slightly against you here, did the double dip, and then just took off. And that's really what you want to see. Those are the best setups. But typically, aside from this situation, most of the time, what you'll find, such as here in this situation, it tends to move in your favor immediately. Okay, why? Because you have that momentum on your side. Okay, so here is the another point where the RSI dipped below and back above, and that gave you your entry right there. Okay, looking towards the right of the chart, when we did get strong momentum lower, throughout this period here, there were no entries because the price and the 20 were not below the cloud until this point here. And by the time it retraced here, we lost that momentum. So we had to give up that trade and wait for another entry, and we got it back in here, right in here. Okay, let me mark that point in time right here. Okay, let me just thicken that up for you. Right there. So there was your entry, and it just propelled lower. Again, what you'll notice is that most of the time it'll go in your favor when you have that strong momentum. Okay, a few more examples here. Here's a chart of Baidu. Again, you have the cloud, which will tell you whether you're trending higher, lower, or moving sideways. Throughout this period where it was back and forth, no real slope on the 20, that was just choppy sideways action. We ignore that. Once we broke above and we had that significant slope, that's when we turn to the RSI to look for a way to pinpoint our entry here. And there it is right in here, this area, right here, and off we went. Okay? Now that was just before earnings. Earnings did propel that higher, but even before that, on this entry here, we went from an entry of about 185, okay, just before earnings, we were already at 200. So we had already moved $15. Any of you who know me know I would have been out of that trade before earnings. I don't like risking these gaps on earnings, so I would have at least taken part of my position and maybe ridden a small portion through earnings. But regardless, that was a $15 gain just before that. Let's look at another one here. Here's MasterCard. If we look to our left, here's a perfect, clean example of what we're looking for. When you have price and the 20 clearly above the cloud here with very, very nice slope, very strong momentum on your side, and you get that brief dip below the 50 line on the RSI and back above, there's your entry. And you can see here, no double dip, no nothing, but very, very nice strong move to the upside here on MasterCard. We went from an area of about 75.5 all the way up here where the actual high was 84.75. Now we know we're not going to get the absolute high of that, but still lots of room to profit in there, okay? And some of these high flyers like Teslas of the world, Amazons, work extremely well with this, as well as the lower price stocks. Here's Tesla, and this is one thing I want you to pay attention to. This is very clear. When you get a move from below to above the cloud, okay, and that momentum is already in place, it's pretty much a no-brainer. All you're looking for is you're hoping for that pullback to the 50 and then a move higher. So here's a great example. As long as it, what we call kisses the midline here, okay, as long as it comes back to touch it and moves forward, that's enough for an entry, and that was right in here. So you can see on this one, your entry would have been around the 181 mark, and it immediately and very easily went to about 265. Now again, off of earnings, but even before that, you had it was in the, just over the $200 mark. So you can profit significantly off this. Let me show you a couple more, and then I'll get into some Forex and futures examples, because I noticed there are many of you that trade Forex and futures here as well. So here's Johnson & Johnson, and again, this becomes so easy to spot and so quick to spot because the rules are so simple. You're looking for price above the cloud, 20 above the cloud, a nice slope. You turn to the RSI. There's your dip below, right here. Okay, let me mark that right in here. Okay, and there, if you can see my crosshairs, there's your entry. Now, this one was on earnings. Okay, this little pop, but again, even if you miss that, look what happened right here. Even if you don't want to trade earnings, if you're like me, there, you get another shot just a couple weeks later, an actual double dip, and off it went. So very, very simple, very easy, but very effective. Okay, I'll ask you in a minute to type in some symbols, and I'll let you we can go through some examples together. But here again is Nike with even after this pop on earnings, huge pop, pulled back, closed half that gap, and then we got our entry right here. And actually, if you got into this trade, you'd still be in this trade. Okay, this one was from around the 87.5 mark. It's currently at 95 and still going. So very, very nice. Let's take a look at a couple of Forex quotes.
What's that?
So here's the Aussie Canadian dollar, and whether you're trading Forex, futures, stocks, it really doesn't matter. The point is it's basic technical analysis. The same exact rules apply. So here's your Aussie CAD chart. You have that beautiful slope higher as it crosses from below to above the cloud. So at that point, you switch your view to the RSI, and you're waiting for that dip, and here it is. Beautiful, beautiful entry right here, and it just takes off. And typically you get more than one shot at it right here. There's another one. Okay. Here's a chart of the EuroCAD. Same thing. Right here is a nice entry right in this area. Okay. And I mean, it just went on a very nice run, and also to the short side. Okay. Again, for the short side, you're looking for that momentum lower. Okay. You want price bars and the moving average to be below the cloud, and then you're looking for the RSI to pop briefly above that 50 line and back below, and right at this point is where we get it. Okay, and it's that momentum that really carries you lower. So right there is your entry, short, and off you go to the downside. Okay, and then later on it consolidates back to the cloud and then moves on, and you get another entry right in here. Okay, so very, very simple and easy. Let's look at crude. Crude lately has been just annihilated, and when you find a market like this, whether it's going up significantly or down, it really doesn't matter. What you really want is that trend and momentum on your side. It makes trading so much easier. And then once you have that in place, you're just looking for these entry points, which are right here. They're all over the place. Okay? That dip above, back below, and there you go. So any one of these points in here, okay, would have clearly gotten you in. None of your stops, no matter which one you would have taken here, which one of these three setups you would have taken, would have been hit. None of them, and off it goes. It just collapsed. It's been a great trade. Here are the Euro futures. Same thing. It's been having a very tough time. Oops, sorry, let me spin back out. It's been having a very tough time, just like crude, just like the yen. It's been getting hit hard, which is opportunity for us. And here's a perfect example of, that little kiss we're talking about. Just comes back to the line, just enough to give you an entry, and off you go. So very, very clear. Now, if you'd like me to review any charts, please, this is the time. Put in a symbol that you'd like me to bring up, and we can see how this would have worked. There, I can see there's a ton of questions here as well. We'll try to get to some of those for you. I'm going to actually bring in Raul, because we have so much there in the chat log. It's hard for me to keep up with it. I'm going to ask Raul to come in and help me read some of those off, and I'll concentrate on my charts. Raul?
Vince, how are you?
Great, thanks.
Thank you for having me here. Most popular question.
Yes.
Is Vince single? No, I'm kidding.
No.
Does this strategy work on intraday charts and other time frames?
Yes, actually it does. It very much so does. And we can look at a few of those examples for you for sure.
Andrew wants to know if you can take a look at the British pound Japanese yen.
British pound Japanese yen, sure. Let's have a look at the British pound JPY. Okay, so here, and this is a great example because for most of this year here, there's been no trade in this currency. You can see how it's just been choppy, sideways action back and forth. But earlier on, back in here, where you had that slope, okay, it's so easy to spot. There it is. There's your entry right there, that little dip below right here, okay, and off it went. So this is really what you're looking for. That slope is the first thing you look for. Then just make sure it's on the right side of the cloud and look for that that cross of the 50 line in the RSI. It really doesn't matter which market or which time frame, as you'll see with these examples.
Folks, as Vince said, we do have a lot of questions, so we'll apologize in advance if we can't get to yours. We'll just pick the most popular ones. Most popular symbol, Goldman Sachs.
Oh, sure. GS, yeah, a great stock to trade. Really moves quite a bit, and you get plenty of opportunities with GS. Let me show you here. If you look to the left here, last November there, you can see right in here was your dip. So again, you're above the cloud with the price bars and the moving average. You have that slope, and you're just looking for that dip and identifying that entry, and off you went. From here, your original entry would have been in around the 168 mark, went as high as 180 on that one move. And again, there is a method to use to stay in this just about and capture just about all of that move. I'll talk about that in a little bit. Again, more recently here during this slope higher, and again, this is what you really want to pay attention to right in here. Okay? When you get the move from below the cloud to above, or vice versa, but you do so with momentum intact, you need to put that on your watch list, because there is an opportunity right around the corner for that. And let me remove this just so it's a little clearer. Even if the moving average flattens out for a little period of time, as soon as it starts gaining momentum again, there is your entry right there, okay? Anywhere in here. Sorry, right in here, okay? So The point where the line crosses above the 50, that's the bar. So right here, this green bar on the right, any trade above the high of that bar, and you're in, okay? So now, if it were to trade below the low of that bar first, then you can negate that trade and ignore it and move on. And by doing that and using that, you will avoid many losses that way. That will turn most of the trades that don't work out won't be losers. They'll just be negated. Okay, that's one thing to really keep in mind.
We have a nice comment from Andrew. Andrew says, "Thank you. I love this approach." Andrew, this is what Vince does. And try to keep things as simple as possible.
Thank you for the comment, by the way.
Russ wants to know about TWX.
Sure, TWX. Let's have a look. Okay, so here's TWX now. Very, very choppy. You can see that when it did move above the cloud, from below to above here, it did have momentum. We did not get a shot at it, and by the time we did, it had kind of lost momentum. Now, this doesn't mean that you can't take this trade, okay? You can, it's just not as strong of a setup. So this ended up being a huge winner, but this is when it did. Here, look, see when it came back to touch the line again, to kiss it on this bar here? That's when that momentum had started going our way again, right in here. Unfortunately, it did so on a gap. So, you know, realistically, you would not have taken that trade because gapping up like that, you know, where are you going to put your stop? Below the previous low? Look at that level of risk you have. It's enormous. And remember, the other thing to keep in mind here is that there's so many setups with the system. You can be very selective and very choosy and still be quite active. So this one, not many opportunities because it was either on the wrong side of the cloud or just mostly choppy. But this is the nice thing. This prevents you from getting chopped in and out of these trades and taking these losses. Okay, that's what these rules are meant for, and that's why you only want to be in those strong trends and have it move in your favor immediately. So,
thank you for that. Louis, Clara, Troy, and a few others want to know about LinkedIn.
Sure, LinkedIn. Excellent. Okay, so here's a perfect example of what I was just talking about. When you do have a sustained trend in place, such as this, you get multiple opportunities along the way. The clearest was back in here, right on this step here, okay? Right, I don't know if you can see my crosshairs right on this bar right here, okay? Lower, because you had that significant momentum on your side, and all the other characteristics were in place. So now LinkedIn is interesting because of what's happened recently off this earnings announcement. It has gapped above the cloud, so it looks like we're going to cross from below to above on the 20 with that momentum in place. So in the near future, you should get an entry, a valid entry on LinkedIn. That's one you might want to keep on your watch list.
Philip wants to know about Priceline.
Priceline, sure. Now, a lot of these are you know, the higher price stocks, but it really doesn't matter, and especially if you do trade options, which I noticed many of you do. You can really leverage this with options. This is a fantastic system to trade with options. But again, it's so easy. Here's another perfect example of what I've been talking about. When you get that move from either below to above the cloud or vice versa, with momentum on your side. Look at the slope of that 20, right? That's when your attention turns to the RSI, and right in here is your entry, okay? Right on this bar here, okay? So there you go. You trade below the low of that bar, and off it goes, okay? And just that momentum just pushes it forward. It's fantastic.
Keith wants to know about TS, Tenaris.
Sorry, TS?
Yeah. You know what Tenaris does?
Actually, I do not.
They're an Italian manufacturer and supplier of seamless and welded steel pipe products.
Ah, well, okay. I don't follow fundamentals, and I don't really care what companies do. Believe it or not, I strictly follow technicals. So, but again, right back in here, if you look to your left, was an entry right in here. Why? Because we had price and the 20 below the cloud, and you had that momentum on your side. Then you had the RSI briefly pop above and back below, and again, actually it was even earlier you had the trigger right there. So any one of those could have got you in for this move lower here. And more recently here, we just had a trigger in this area right here, okay? Right there, there's your little double dip, beautiful, and off you go, okay? We're almost out of time.
I could keep you here for hours.
Sorry.
I'll do one more, and then I'll let you get back.
Okay.
We'll do U.S. dollar, Canadian dollar.
Sure, let's look at USD CAD. Have a look. Again, very clean, very easy. Look at this area back in here, right? Any point along there. And again, if you get in on the first one, that's fine. You have your stop in place, and then it becomes a matter of managing that trade. You're not worried about this, but whenever you see this, that's like a coil just winding up, ready to explode, and that's exactly what happened. Okay, so all these secondary entries here, okay, allow you to either top up your position if you like, or just would sit through it, okay, totally up to you. Again, back in here, you can see we crossed from below to above with significant momentum, but then we flattened out. So throughout this area here, when we had these dips, you know, you didn't have to even bother looking at this because it was flat. You no longer had the momentum on your side. But once we regained momentum here, right in here, this would have been your sweet entry right here, okay? Right in this area here, okay? So anyway, let me just bring back my slides for a second. I just want to recap what we've done. I really wish we had more time here. But to recap, what I've shown you today is a system that will work on any market. You've seen it on futures, Forex, stocks, and to trade this with options is amazing. It's very easy and simple to spot on a chart. Okay, it can be used as a standalone system on its own or as a great complement to whatever you're trading with now. And as you've seen with many examples, it tends to move in your favor immediately. And the majority of the trades that don't work out are not even losers. They're just negated trades, okay? So I really wish I had a lot more time to cover the full system. What I've shown you here is that the core basic of it. There is a lot more involved here. But coming up this Saturday, November the 8th at 11 a.m. Eastern Standard Time, I'm going to be teaching the pro version of this system, okay, full pro class, where I'm going to show you a very unique way to use support and resistance, a method that not many people use that will really increase the accuracy of this system, which is already, as you've seen, very accurate. I'm going to show you how to supercharge it with options, okay? We're going to spend time going over option strategies and show you how to trade this with options. We're also going to spend time together to do a full scan and pull out some real-time trades setting up for the coming week together, okay, so we can all profit from this. And as a bonus, without we throw in a whole other course, okay, again, many of you might be familiar with the Ichimoku Kinkenhoi indicator, but in Asia it's used pretty much on its own as a standalone system. So we're going to take time in Saturday's class to cover that in detail and show you exactly how to trade just with that indicator. It's a whole other course that we're throwing in that we normally sell for $297, okay? The link for this is tradingwins.com/invest, okay? And this is what you're going to get when you sign up. You're going to get a live seat at the pro class on Saturday, and it is going to be recorded. So if that date doesn't work for you, if it's too short notice, no worries. We'll get the recording out to you very shortly after the class ends. We're also going to throw in a complimentary invite to one of our coaching mastermind sessions. I have a mastermind group of 10 traders that I typically work with. We meet once a week, 4 times a month, 2 hours each week, where I personally mentor them and help them take their trading to the next level. We're going to give you an invite to that session, okay? And also throw in a 30-day membership to our pro service here at tradingwins.com. What this entails is we send out videos every night, Sunday to Thursday, recapping what happened in the day, that day in the markets and where we believe things are going. And we highlight real trade setups that are setting up. And it also includes our trade alerts as well. And really those videos are meant as an educational tool. While we go through that, there's many different aspects of technical analysis that I cover, so it's a great tool. So altogether, it's a $941 value, but all we're going to ask for today, anyone on this webinar, is just $97. Okay, it's an incredible deal. Again, it's tradingwins.com/invest. We do limit it to the first 25 people because the class gets very involved, and we want to make sure we answer every single one of your questions so that you can all walk away from Saturday's class trading the system like a pro. Okay, so again, this is what you're going to get. I'm not only going to show you the full system of what you've seen today, but I'm also going to throw in that unique method of support and resistance. I'm going to show you how to trade this with options. We're going to do a full scan together for real-time trades that will more than make up the cost of this class. And as a bonus, I'm going to throw in the full course on the Ichimoku indicator. Okay, again, it's tradingwins.com/invest. Raul, I don't know if we have much time. If there's a couple questions,
we've got 2 minutes. I just wanted to say thank you to Dimitri, Edwin, Paul, Jasmine, John, Martin, Isaac. Thank you for signing up. Looking forward to seeing you there.
Great.
The reason we keep it at 25 people is because we want to be able to get to all your questions. There are going to be a lot of great speakers on today that have a lot of great product.
That's right.
It's not meant to. This is not meant to say you need to spend your money with us, but it's a fantastic system. Do you need any special software, asks Phil?
No, not at all. Again, most platforms, even the free ones out there, the basic ones, have the RSI indicator, have the 20-period moving average, and nowadays most of them have the Ichimoku cloud as well. So you don't need to spend any money on equipment.
Troy wants to know with the subscription, what happens after the first 30 days?
Oh, after the first 30 days, if you're enjoying it, you do nothing. It'll just renew at a $97 a month price point. But if for whatever reason you'd rather not continue, just give us a call. We'll cancel that anytime.
How much of the discussion is going to be on options on Saturday? Asked Susan.
There will be some discussion on options. I'm really going to concentrate on the basics you need to trade this. In other words, we're going to help you find the right expiry, the right delta, all of that. We'll cover the basics of how to trade this with calls, puts, credit spreads, etc.
Tony wants to know, is there a phone number? He's having difficulty registering online. It's 1-888-574-2426. The operators are here. If you don't get through, please leave a message. They will call you back. We are on live chat as well.